All right, hi everyone. Welcome to today's live trading session brought to you by IronFX. Right, before we begin today's webinar, please take note of the disclaimer and the risk warning. Right, the information here is not considered as investment advice or an investment recommendation, but instead it's just marketing communication. And also take note that all the products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. Right, my name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's left on the economic calendar for this week. Right, there's quite a few things going on as well. Today, we've got US consumer inflation data coming out. At 12:30 p.m. GMT time. And tomorrow we have UK GDP as well as US PPI data later on in the evening. So today, right, this is the calendar for today and tomorrow. Take note, I'm on GMT time. So consumer inflation data, which is CPI, is going to be released at 12:30 p.m. GMT time, where we'll get a look at the latest inflation results for core and headline CPI for the month of March. And then tomorrow at 6 a.m. GMT time, Friday, 11th of April, the UK will release its GDP report, and later on, we'll have the PPI report for the US at 12:30 p.m. GMT. Now, taking a slightly closer look at CPI, right? On the left, I have the chart for headline CPI, and on the right, I have the chart for core CPI. We can see that headline CPI had accelerated quite sharply from September of last year, rising from 2.4% to as high as an annual rate of 3% in January of 2025. Core CPI had remained relatively stable during that period, and we had a slight improvement from the perspective of inflation in the month of Feb. We saw headline CPI moderate lower down to an annual rate of 2.8%, while the core reading also dropped from about 3.3% down to 3.1%. So probably it looks like the first signs of inflation moderating lower in 2025. And now when we look at the forecast for March, right, when we look at the forecast for March, we can see that headline CPI is expected to moderate once again, falling from 2.8% down to 2.5% here. So that we should also see core CPI edge a little bit lower as well, right? So we are quite likely to see headline CPI ease to 2.5%, while core CPI should edge a little bit lower at the same time. Now, what this means is it would mark the second month of slower price increases in the US, all right, and that would mean inflation is heading in the right direction once again. Remember, after this acceleration here in the fourth quarter of 2024, right, there's a little bit of concern that inflation could continue to climb higher. However, should we see the figures for March point to another month of slower price increases, right, that's going to alleviate some of the inflation concerns, and that would also cause the US dollar to come under pressure. Right, we've already seen the US dollar come under significant overhead pressures over the last few weeks. And when we move on over to the charts and trading view, it'll be very evident once we view it on the charts. Right, so if we do see inflation continuing to, or if we do see inflationary pressures continuing to dissipate further, that's going to create more headwinds for the dollar, for the US dollar, and cause the dollar index, of course, to fall or to continue to fall lower. Now, on Friday, at the same time, right, 12:30 p.m. GMT, PPI data, which is the producer price index. This measures the level of inflation in the wholesale sector. This is also going to be released on Friday. And we've seen headline PPI accelerate in the last quarter of 2024, while core PPI remained relatively elevated till January of this year. Now, in Feb, we did see headline PPI drop from 3.7% down to 3.2%. And we also saw the core reading drop from 3.7 down to 3.4%. So it did inflation for the wholesale sector eased slightly in Feb. However, when we look at the figures estimates for March, we're looking at a much stronger monthly increases. Remember, for February, core CPI actually deflated, while headline CPI, core PPI deflated, while headline PPI remained flat. However, when we look at the forecast for March, it signals a much higher monthly increase. So I won't be surprised if PPI remains relatively stable at around 3.1 or 3.2% for the headline reading, or perhaps even accelerate. And similarly, for the core PPI, we could see it remain stable or accelerate as well. If that were to happen, right, this could potentially create some near-term, provide a near-term lift for the US dollar. Remember, if inflationary pressures start to increase, that's going to create raise concerns, right, where of inflation perhaps accelerating once again, and that could cause the dollar to be supported in the near term. And finally, UK GDP will be is going to be released at 6 a.m. GMT time, Friday, 11th of April. And we can see here on a monthly basis, right, GDP contracted in January of 2025, but the forecast for Feb points to a slight increase of 0.1%. It looks to be a very weak economic growth for the month of February. Now, because the dollar has seen a lot of a weakness in recent weeks, that has caused the pound to remain elevated and remain strong as well. So despite a weak GDP result tomorrow, right, I think the pound is still going to be supported quite strongly on Friday. All right, now with that, let's move on over to the charts and trading view and begin the analysis on the dollar index, right? Then we'll work our way through some of the major currency pairs, right? We'll touch on dollar yen, we'll touch on pound as well, since we got GDP data out tomorrow. Then we'll jump on over to the commodities, touch on the indices, touch on crypto as well. And of course, should you have requests for any other instruments, please do drop them in the chat box, right? And I'll be more than happy to go through the analysis with you. Now let's start off with the dollar index. I'm on the daily time frame here, and we can see that since mid-January, the dollar index has reversed sharply off 110, dropping as low as 101.20. So this has been a huge drop in the dollar index, which signals significant dollar weakness. If you look at from the peak to trough, right, it has dropped well over 8%, a big drop in about a period of 3 months. Now, we're going to start the analysis on the daily time frame, because we can see some of the moves have been really large, and also we are able to identify clear trends. So you can see very clearly from the end of September till mid-Jan, dollar index moving from bottom left to top right. We can clearly see a strong uptrend being formed, and at the same time, we can also see a series of higher lows and higher highs. So previously, dollar index was trading in a very significant bullish uptrend or upward channel. Now, that this channel gave way on Monday, 20th of Jan, and then dollar index proceeded to fall lower, forming a prolonged downtrend. And since mid-January, right, we can now identify a pretty significant downward channel for the dollar index here. So you can see a pretty decent downward channel that we can identify. And of course, we can see that not only is dollar index trading within this downward channel, it also trades underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. We can see prices falling lower. The Ichimoku cloud is also falling lower, and we can clearly see a series of higher lows and lower highs and lower lows, right? And we can see that dollar index has hit the upper trend line several times from mid-Jan till the first week of August. And from mid-March till now, it has hit the lower trend line of the downward channel several times. So this is a very good channel to be aware of, right? Because it not the channel alongside the red Ichimoku cloud helps us identify the current trend and the strength of the bearish momentum as well. And once again today, right, we see the dollar index falling quite sharply and is falling towards what I see is an overlap support. Now this level here at 101.78 has been identified as an overlap support now. Previously, this level functioned as resistance back in August and September of last year, 2024. This level functioned as a resistance. You can see like a nice double top being formed here. So this was a pretty significant resistance barrier for the dollar index, but it gave way on 4th of October, and it began a very strong bullish uptrend. So what was previously a strong resistance barrier, right, can now function as a potential support once price breaks higher. And that's what has happened quite nicely last week. last Thursday and Friday, right, dollar index managed to stabilize above the level of 101.78. Of course, we can see the wick here dropping as low as 101.30, but nevertheless, you can see the candles holding up, right, the daily candles holding above 101.78. And as recently as yesterday, Wednesday, 9th of April, we can see the dollar index falling sharply towards this level once again before bouncing off it. So very clearly, this level at 101.78 is a very significant overlap, which we can identify as the first support. Now, what this also means is, with regards to this first support, what it also means is, with dollar index falling sharply today, and if you've been short on the dollar index, right, you can identify a suitable take profit target close to the first support, right? I see a pretty decent support zone being identified between 102 and 101.80. So between 102 and 101.80 is where I would identify a suitable take profit target for any short dollar index trades that you may have. Now, beyond the first support at 101.78, there's another significant support area being formed here, right? Almost like another double bottom here, right? A very significant swing low being formed from 28th of August till the 1st of October of last year. So we can see this trough here, very nice base being formed here, very nice trough being formed here. And we can use this in the identification of the second support. And that level sits at 100.20. Right. On this uptrend here, let's see if we can run a Fibonacci retracement from this swing low on 27th of September, going up to the swing high on 13th of Jan. All the retracement levels have already been hit or gone under, or even 78.6% has been broken under. So that's fine. Don't force the Fibonacci. We don't need the Fibonacci retracement on this uptrend. Now let's try and identify resistances. We can see here, right? There's a pretty nice overlap level. I can see a very nice overlap level sitting at 103.68. Previously, this level functioned as resistance back in August of 2024. And then when it broke higher in mid-October, it formed a nice double bottom. And when it did that, it created a very nice overlap support. And this overlap support held up well in middle of March, 11th of March, and 19th of March, making another double bottom here for dollar index to retrace higher. So you can see here up till the end of March, this was a very significant overlap support, which finally gave way on 3rd of April. Now, after giving way on 3rd of April, and then on 4th of April and beginning of this week, Monday, dollar index retraced higher, rising up into this overlap level, but it ran into resistance, right? It ran pretty much exactly into resistance at 103.40. On Monday and Tuesday, it then reversed off this level to drop lower. So very clearly, this level here is a very significant overlap, which we can identify as the first resistance. Now higher up, there's a nice swing low that was formed here, right? We can see a nice swing low, a swing high resistance being formed at around 104.70 on Thursday, 27th of March, right? As dollar index retraced higher, it stalled at around 104.70 before proceeding to make a bearish reversal and dropping quite sharply. So there's a strong resistance barrier here as well. So we can use that swing high resistance in the identification of the second resistance. Now that we've identified the resistance levels, we can run a couple of Fibonacci retracements. We're going to be running the first retracement from this swing high here on 26th of March, going down to the swing low on the 3rd of April. When I look at the 61.8% retracement, and I can see that it sits very well with the first resistance. So not only is the first resistance a very significant overlap level, it's also accompanied by Fibonacci retracement at 61.8%. So that is why we've seen the dollar index run into resistance a couple of times. First on Monday, 7th of April, then again yesterday, Wednesday, 9th of April as well. And today, right, it is falling sharply lower. And if you've been short on the dollar index since earlier this morning, I would suggest a potential take profit target zone at around within the area that's identified between 102 and 101.80. Right. Now, on Starting from this swing high here on 13th of Jan, we can run another Fibonacci retracement. This time, right, starting from 13th of Jan down to the swing low on the 3rd of April. Looking at all the fibs, we can see that the 38.2% retracement aligns very well with the second resistance. And we can also see the 23.6% retracement aligning very well with the first resistance. So we'll keep these two levels on. And what we have at the first resistance is a Fibonacci confluence. So Fibonacci confluence simply means that we have more than one Fibonacci level at a particular price zone. So in this case, we have the 61.8% retracement and the 23.6% retracement. So this adds further significance to the strength of this resistance barrier here. All right. Once again, these are the key levels for the dollar index on a daily time frame. Right, it continues to trade in a prolonged downtrend that has begun since mid-January. It also trades inside within this downward channel and trading, of course, trading underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. And it has just, as of yesterday, right, it ran into resistance at 103.40 once again, and is falling sharply today. And I would suggest a potential take profit target at this zone here that's identified between 102 and 101.80 if you have any short positions for the dollar index. Now, let's move on over to the cable. Right, since we've got GDP data coming up tomorrow. And as I mentioned, GDP growth is expected to increase marginally on a monthly basis in March, right? But so despite weak GDP output over the last couple of months, I think the pound is still going to be supported because we are seeing very high weakness or very strong weakness in the dollar index. Remember, if dollar index is falling, that means demand for the US dollar is very weak. And that, of course, naturally would mean currency pairs like the euro, pound, Aussie, and Kiwi should be rising, and which is something that we are seeing. This is something that we've seen since mid-Jan as well. Now, of course, cable suffered a very sharp pullback last Friday and Monday. However, this currency pair stabilized at around 1.2720 on Tuesday and has rebounded quite nicely. We can see here from peak to trough, cable dropping almost 3.8% in a couple of days, right? Pretty big drop in a couple of days, right? Almost 500 pips, losing almost 500 pips in this process. But since then, it has rebounded to climb 1.3%, hitting about 170 pips. So very strong rebound here for cable. Now, looking across here now, if we have if anyone has been long on this currency pair since Tuesday or yesterday, right? I see it approaching a pretty decent resistance barrier here, right? I see a nice pullback resistance. I see a nice pullback resistance identified at 1.2878. So I'm going to identify this level as a upside confirmation level. So that means that if we do see a pound breakthrough this level at 1.2878, we're likely to see it climb significantly higher, right? So this level, as you can see here, at 1.2878, previously functioned as support from 6th of March till 4th of April, right? Functioning as a pretty decent support level here before finally giving way on Monday at the beginning of the week. So what was previously a support level can now potentially be resistance. And with demand for this currency pair looking strong, if we do see a clean break above 1.2878, we are likely to see it climb even higher. And if that were to happen, right, then I see, of course, a nice swing high resistance at 1.3100. So this is where we can identify a potential, there's a couple of potential take profit targets that we can identify. One would be at 1.3100. And I also can spot another pretty decent pullback resistance at 1.3010, right? This is more of an intermediate resistance level, but nevertheless, if we do see a nice bullish breakout for cable materialize, the first take profit target that I would identify would be at the pullback resistance at 1.3010. And of course, should it climb, continue to climb even higher, then we would target the swing high resistance at 1.3100. Now that we've identified the resistance levels, we can also run a couple of Fibonacci retracements. Let's start with the first one here. From this swing high on 26th of September, going down to the swing low on the 13th of Jan, I believe all the fibs have already been crossed except for 78.6%. And we can see that it sits quite close enough to the first resistance. So we're going to keep get rid of all the other retracements and just keep 78.6% and highlight the first resistance as a zone here. Now, on this downtrend here, that begins from 3rd of April till the 7th, we can also run a Fibonacci retracement. And when we look at all the fibs, we can see that the 61.8% retracement aligns very well with the intermediate resistance that I had identified at 1.3010. So hence, this is why I identified this level here as the first potential take profit target. So remember, cable is running into the first the first pullback resistance at 1.2878. If we do see a clean break above this level here, then I will target the 61.8% retracement as my first take profit area. And of course, should this currency pair continue to climb even higher, we can then target 1.3100 as the next area. Now, in terms of support, right, as we've seen, cable stabilize at around just above 1.2700 on Monday and Tuesday. It also looks to be previously looks to be a pretty decent resistance barrier back from 20th of Feb till 27th of Feb. So you can see a previous resistance barrier functioning as a decent support area in the present time. So it's always important to take note of such resistances and supports because they can really interchange and help us identify a potential future area of resistance or area of support. So we can see here there's a bit of resistance back in the end of Feb at 1.2679. And this is pretty much where, or not pretty much, but this is where cable sort of stabilized just above it here. So this is at the present for as of now, this is the first support for this currency pair, and a little bit below, I see a nice pullback level, right? This level previously was resistance back on 6th of Jan. Oops. Right, this level at 1.2520 previously was resistance on in the first week of Jan and end of Jan and early Feb, right? So this was like a multi-swing high resistance barrier, which finally got broken on 13th of Feb, and a previous multi-swing high resistance can now potentially function as a support area. So that's how we've identified the second support for cable. Now that we've identified the support levels, we can run a nice Fibonacci retracement, right? Starting from this swing low on 13th of Jan, going up to the swing high on the 3rd of April. When I look at all the fibs, I can see that 50% sits just underneath the first support, while 61.8% aligns very well with the second. So of course, we're just going to keep 50 and 60, because with this retracement here, with this strong pullback here, we already can see that the 23 and 38.2% retracement levels have broken through. So we'll keep 50 and 60. Right, and also because cable has stabilized just above, just around 1.2720, I just want to highlight this as a pretty, this is actually like a pretty big support zone here. Yeah, we have the swing low support that had occurred on Monday and Tuesday. We have a pullback support that occurred at the end of Feb, and we have the 50% Fibonacci retracement, all of which combining to identify a pretty strong support zone here. Now remember, we've seen a strong rebound since Tuesday. However, it is approaching a potential resistance barrier, and there might even be a 38.2% retracement, right? We've also got a 38.2% retracement here. And if we do see a clean break above this level, right, I think we can see cable hit the 61.8% Fibonacci retracement as the first potential take profit target. All right, now with that, let's move on over to dollar yen. Let's move on over to dollar yen, and we can see that similarly to the dollar index, it shares a similar market structure, right? You can see it trading in a prolonged downtrend, a series of lower highs, lower lows, and of course, at the same time, trading underneath the red Ichimoku cloud. So this once again enables us, this downtrend here, and once again enables us to identify a pretty nice channel, right? You can identify a pretty important downward channel. We can see dollar yen hitting the upper trend line of the upward downward channel on 28th of March and bouncing off the lower trend line several times, especially here in the first week of March, and then again in early April. Now, we can see that dollar yen has bounced off about 145, 144.50 quite strongly last Friday and yesterday as well. And it's actually bounced off what I see is a pullback support level. Previously, this level at 144.83. This level previously functioned as resistance here at the end of September of last year. And then when price broke above it, what was a previous resistance barrier could now potentially be a support. And that's what has played out quite nicely since 3rd of April, right? We can see here nice support being formed here, nice base. And this then creates an overlap level. So this level at 144.83 is an overlap support, which we will identify as the first support. Now, in terms of the second support, right, there's also a nice swing low being formed here. This was formed on 27th and 30th of September, right? As dollar yen fell sharply on the 27th, it stabilized on Monday as markets reopened and staged a very strong rebound. So this looks to be a pretty strong support area as well. And we can identify the second support at this swing low, and this level sits at 142.06. Right. Now, in terms of resistance, right, we can see that since the beginning of the week, dollar yen has stalled at around 148.20, not once but three times, right? It has stalled around this level not once but three times. And it's also a level where a prior pullback or swing low had formed on 20th of March. So this level here, right, looks like another overlap as well, which we can identify as the first resistance. Right, and once again with dollar yen falling sharply today, very similar to the dollar index, right? And if you've been short on the dollar index, so if you've been short on the dollar yen today, right, I would identify a potential take profit target close to the first support, right? We can see here, that's a nice support area beginning from 145.50 till 144.83, right? So this is where I would identify a suitable or potential take profit target for any trades that you may have on the short dollar yen here. Now, in terms of resistance, right, quite clearly, the next resistance beyond 148.16 is going to be close to the swing high resistance, right? It's a swing high resistance that is close to the upper trend line of the downward channel. It's also close to this swing high resistance that had taken place on 3rd of March. And it's also aligns well with the swing low support that had taken place in the first week of Feb. So you can see a nice base being formed here in Feb, resistance here in early March, and resistance once again right at the end of March. So once again, this then creates a very nice overlap level, which we can identify as the second resistance. The second resistance at 151.23 is an overlap level. All right, now that we've identified the resistances, we can run a couple of Fibonacci retracements. First retracement is going to be starting from this swing high on 28th of March, going down to the swing low of yesterday, Wednesday, 9th of April. And we can see that the 61.8% retracement sits just above the first resistance, right? So not only is it now a very significant overlap level, it is also a resistance barrier that's accompanied by the Fibonacci retracement at 61.8%. Now we can run the second retracement, starting from this swing high on 10th of Jan, going down to the low on the 9th of April. Looking at all the fibs, we can see that the 50% retracement sits pretty close to the second resistance. So we're just going to keep this level on, this retracement level on here. Right. So similarly to the dollar index, right, we're seeing demand for the dollar being very frail, right? And that, of course, would mean currency pairs like dollar yen would be falling. Dollar index would also be falling. Both are approaching what I see is a pretty decent support area. So once again, similarly to the dollar index, right? If you're short on dollar yen, I would identify a suitable take profit target anywhere between 145.50 till about 144.90, right? It is approaching, looks to be approaching a pretty strong support area or pretty strong support zone. Right, now with that, let's move on over to the commodities, beginning with gold, right? And we can see that after making its latest intraday all-time high at $3,167 per ounce, this was on 3rd of April, we saw gold prices pull back quite sharply. If we look at it from peak to trough, this precious metal dropped almost 6.7%, right? A big drop in about a period of 3 trading days. But since then, right, since this week rather, since the beginning of this week, gold prices have stabilized at around $3,000 per ounce and have staged a very strong rebound since yesterday, right, Wednesday, 9th of April, right? And when I see it stabilized, and when I see it stabilized, that was close to a prior resistance barrier, right? You can see a nice swing high resistance being formed here in the 3rd week of Feb. And when price broke higher in mid-March, a prior resistance can function as support, which is what has played out at the beginning of this week, right? So gold prices, spot gold prices was falling towards a pullback support level, at $2,954. And once it bounced off this level on Monday, it created an overlap. Remember, as it's falling down, this level here is would be identified as a pullback support level. But once price hits it and moves higher or bounces off it, this then becomes an overlap level. So first support is an overlap level at 2,954, and we've seen a nice bounce take place. Now, in terms of the second support, right, I see almost like a nice double bottom being formed here. First being formed on 7th of Feb, then the second being formed on the 28th, before gold prices bounce strongly once again. So you can see here, nice double bottom being formed at around $2,834. And this is how we've identified the second support. Now that we've identified the support levels, we can run a Fibonacci retracement on this nice uptrend, right, that begins from this swing low on 14th of November last year, going up to the intraday all-time high on the 3rd of April. When we look at all the fibs, we can see that 38.2% sits just underneath the first support, and we can also see 50% sitting pretty close to the second. So we're going to keep 30 and 50 in the analysis here, right? And you can see there's actually a pretty strong support zone at around the first resistance that probably begins from about $2,930 per ounce till about $2,984 here. Now, of course, with gold prices rising strongly, right, it's approaching the close to the intraday all-time high, but I would identify my take profit target at around $3,130. So if anyone had been long on gold, right, as of yesterday or perhaps early this morning, right, should we see gold prices reach this level once more, this is where I would identify the first take profit zone for any long trades for gold prices here. Right. Now with the intraday high being made on or being formed on 3rd of April, right, there's no other level that we can reference to identify the second or other resistance levels. In such a scenario, we have to rely on Fibonacci extensions and Fibonacci projections. So we're going to first find a projection. That's right. We're first going to find an extension. And to find those extension levels, we're going to run a retracement from this high on 3rd of April, going down to the low on the 7th. Key extension levels sit at 127 and 161%. So this is where we can identify, this is what we can use to identify potential resistance areas beyond the intraday all-time high. Remember, the intraday all-time high was formed on 3rd of April. There's no other part of the chart that we can reference to identify as a potential resistance barrier. So in such a scenario, we have to rely on the Fibonacci retracement here to find the extensions. Now, we're also going to be trying to use a projection. Projection involves 3 points. We're going to start the projection from point 1, 28th of Feb, going up to point 2, 3rd of April, ending at point 3, 7th of April. And key projection levels sit at 61.8%, 78.6%, and 100%. And now when we go back, return to the charts, we can see that the 61.8% projection aligns very well with the intraday all-time high. 78.6% sits very well with the extension at 127%, and the 100% projection also sits very close to the extension at 161%. So what we have identified here is two areas of Fibonacci confluences. So beyond the first resistance, which spans from $3,130 to about 3,170. We have used a combination of Fibonacci extensions and projections to find two additional resistance areas, right? These are potential resistance areas that could be used as price targets for any long trades for gold. So that means if we do see gold break higher, right? If we see gold break beyond the intraday all-time high that was formed on 3rd of April, we can then target this first Fibonacci confluence area as a potential take profit target. This is basically around $3,220 per ounce. And of course, if gold can continue to climb even higher, we would then try to target close to 3,300 as another potential resistance area here. Right, so these are the key levels, key support and resistance levels for gold. It has rebounded off the first support very nicely at the beginning of the week, right? Bouncing off on Monday, stabilizing on Tuesday, and rallying very strongly on Wednesday. And the upward momentum continued today as well, 10th of April, right? And should we see gold prices rise into this resistance zone here, this is where I would identify a potential take profit target for any long trades that you may have. Now, let's move on over to WTI oil, and we can see that oil prices have tumbled sharply since mid-Jan. If you look at it from peak to trough, oil prices are pretty much in bear market territory. They've dropped over 30% from peak to trough. It recovered very strongly overnight. However, it looks to be falling down once again, so it still remains in the bear sort of bear market territory if you count the peak starting from March, right? So a very strong fall in oil prices here, and it looks like it's continuing to drop lower. All right, now it's going to be a bit tricky for oil, right? Because we're going to zoom out a little bit, and in some cases, we also might have to use the weekly time frame, right? I think let's go on to the weekly time frame first. And we can see that previously, right, there was a very strong support level here at $61.84, right? We can see a nice swing low being formed here on August of 2021, another swing low bounce here on November of 2021, right? And this level gave way this week. This level gave way this week. So this was previously a very strong multi-swing low support at $61.84, which is now given way. So we're going to be using this level now as a potential resistance barrier, because you can see when price breaks underneath a support level, this prior support level can now function as the first resistance. Now, in terms of the second resistance, we're going to have to zoom out even more on the weekly time frame, right? And I actually see a nice swing low being formed here as well, right? There's a pretty nice swing low being formed here in March of 2021. And this is where we can identify the first support. And for the second support, okay, of course, we can see here WTI breaking underneath here. Okay, when we come back to this chart here, back on the daily time frame, we're going to try and fine tune the level. But beyond that, right, I think beyond that, the next support level could come in at around $50.70, pretty far from where price is currently trading. But you can see there's a nice base that was formed here from June of 2019 till Feb of 2020 before oil finally caved in. But yeah, so I think this is where I believe the first major support is going to sit. And this one could be more of an intermediate support. We'll get a better idea once we come back to the daily chart and look at it here. Yep, you can see here, right? There's a pretty, despite this wick dropping down as low as 54.80, there's a pretty nice base that was formed here, right? So that's why I think this is going to be more of an intermediate support at $58.30, right? It's not the real major support. The real major support is at $50.70. And when we look at it here, right, on the daily time frame, right, nice base being formed here, roughly approximately at around $50.68. Right, so what this also tells us is now, right, as crude prices retrace strongly overnight, it ran into resistance at around $62 and looks to be dropping lower. So what we have here is a potential bearish reversal currently in progress of a major resistance area right? So if anyone who has shorted oil today, right, perhaps after seeing it run into resistance at around $62 and you shorted oil, right, you can identify a suitable take profit target at around $58.30, right? In terms of the second resistance, right, I see a nice pullback level at around $65.34, right? You can see there's a nice pullback level being identified around here. And when we zoom in, right, yep, this is going to be a pretty good pullback resistance that we can identify as the second resistance barrier here. Okay, now that we've identified the resistances, we can also run a Fibonacci projection, starting from this swing high on 2nd of April, going down to the low on the 9th of April. When we look at all the fibs, we can see 61.8% retracement. Fibonacci retracement aligns very well with the second resistance. And 23 and 38 have already been broken earlier today. So we can't use that. And 50 is sort of sitting in no man's land, so that's fine. Right? Don't force the Fibonacci retracements into the analysis if it doesn't sit close enough to a predefined resistance or support level. So in this case, we'll just keep the 61.8% retracement as it aligns very well with the second resistance. Now we can see a nice zigzag pattern playing out here from 15th of Jan. I'm going to run a Fibonacci projection, right? This projection is going to be useful. Or could be useful. Oh, there we go, right? If you look at it here, and we can see, of course, as price fell down sharply last week, as crude prices fell down sharply last week, it broke through the 61.8% projection, 78.6% projection, and even today and on Tuesday, it managed to stabilize at the 100% projection. But of course, now with the spike breaking underneath all these levels here, this projection is no longer valid. So let's get rid of that. All right, so basically, crude prices continue to remain in a strong downtrend, very strong overhead pressures, right? Continuing to trade underneath the red Ichimoku cloud as well. It's broken through many key support levels, right? Especially when you look at it on a weekly time frame, right? It had broken through first this level at $65.40, a very significant multi-swing low support. Actually, look at it here. This was a very significant multi-swing low support that had been in place since November of 2021. This got broken or taken out about last week, right? And then this week, we saw another strong support level at $61.50 break as well. And now the next major support for WTI oil looks to be around $50.70, right? So take note, very strong overhead pressures for this commodity. All right, okay, as we approach, okay, still got a little bit of time, right? Okay, let's touch on the indices, starting with DAX, right? GE40 is the instrument that tracks the DAX futures. And we can see that many commodities or many indices have entered bear market territory, right? We can see that for the DAX, it had made intraday all-time high on 18th of March, right? Hitting about 23,480. And it has dropped almost 20% at its lowest point. So it briefly sort of entered bear market territory, but has rebounded quite strongly since yesterday, Wednesday, 9th of April. Now we can see a nice base being formed here, and it's also pretty close to where this two support levels sit, as well as this resistance. So we can see now, right? DAX has actually sort of stabilized at a pretty significant overlap level that sits around 19,000, right? You can see here, once I draw the overlap level, right, we can see that the DAX has bounced off this level very nicely on Monday, 7th of April at the beginning of the week. So quite clearly, 18,951 is a very strong overlap level, right? We see resistance in August of 2024, September of 2024, and then we see support all the way from October of 2024 till now, April of 2025, right? Quite clearly a very strong support level here. Now, in terms of the second support for the DAX, there's a nice swing low being formed here on 9th of September, and another one beyond that as well in August of last year. So probably the next support beyond 18,900 is going to come in at around 18,256, right? Once again, now that we've identified the support levels, we can run a nice Fibonacci retracement on this prolonged uptrend, right? It is very extended uptrend that begins from August of 2024, going up to the intraday all-time high. When we look at all the fibs, we can see that the DAX has broken through all the retracements, bar 78.6%, and where it's sort of stabilized, right, is close to the 61.8% retracement. Of course, we can see this week on Monday dropping beyond the 61.8% retracement, of course, but generally we can see where price has sort of held up so far. But of course, we can't use the 61.8% retracement anymore. We can just use the 78.6%, and we can see that it sits pretty close to the swing low that was formed in September of last year. Right now, in terms of resistances, right, we can see the DAX stalling yesterday and today at around 21,500, right? There's probably, I see a nice resistance barrier here. Previously, this level was support, right? We can see the DAX bouncing off this level several times from 25th of Feb. And once it breaks lower, this support level can be a potential resistance area as well. Right, but because we have seen the DAX stall at around 21,500, right? I would identify my first resistance at this level, and I would identify my second resistance at this pullback level here at 22,172. Right, now that we've identified the resistances, we can now also proceed to run a Fibonacci retracement from the intraday all-time high on 18th of March, going down to the swing low on the 7th of April. Looking at all the fibs, we can see that as the DAX retrace higher, it has climbed above 23 to 50%, and it's sitting, and 61.8% is sitting around here, and 78.6% is sitting around 22,500. Right, okay, you can see 7.6% is somewhat in no man's land. We're not going to keep it. I'm just going to keep 61.8% retracement in the analysis here, just to give us an indication that there is the golden ratio sits around 21,700. And if we can see, although we are seeing the DAX pull back very sharply today, but perhaps if in the next few days or maybe early next week, if we see equity markets recover and climb above, I would really like to see the DAX climb back above the 61.8% Fibonacci retracement, at least get a pretty good sense of conviction that this index has probably stabilized. Also, I would like to point out this descending trend line, right? It's not the best descending trend line, but it's a pretty decent one to take note of, right? This descending trend line together with the 61.8% Fibonacci retracement will probably tell us whether we are back, whether the bulls are back for the index as well, right? For the DAX basically. All right, now let's go on to the US 500, right? As we approach now towards the end of the webinar, right? If there's any other requests beyond the US 500, please do drop them in the chat box now, and I'll try to get to them after I'm done with this instrument here. All right, we can see for US 500. Similarly, HK50, all right, there's a request for Lily by HK50, all right, okay, I'll try and cover that quickly after US 500. So we can see US 500 forming a nice base here at around 4,900 at the beginning of the week. And it's also somewhere close to where this swing low was formed on April of 2024. Right, so there's a nice swing low support level being formed here in April of 2024, which is pretty much where US 500 stabilized this week. And beyond this level, the next support that I can spot is this pullback level. This was previously a multi-swing high resistance back on December of 2023 and Jan of 2024. And of course, when price breaks higher, this can potentially function as a pullback support level, and that's at 4,800, pretty much at 4,800 here. Right, so that means now on this very prolonged uptrend, we can run a Fibonacci retracements beginning from October of 2023, going up to the intraday all-time high, which is on 19th of Feb. And when I look at all the fibs, we can see that US 500 has stabilized close to the 61.8% retracement here. 78.6 is simply too far, not relevant to the analysis at this point. Maybe in the future, if we see a much deeper correction or much deeper correction, then perhaps the 78.6% retracement could be useful. But for now, we just need the 61.8% here. Right, so actually we can see actually, okay, now that I see it like this, right, I think I'm going to keep first support here. Right, and we can see this the first support alongside the 61.8% Fibonacci retracement has helped us identify a very strong support level here. And that would mean now then the second support would sit at this swing high resistance, prior swing high resistance here July 2023, resistance on December 2023 now can potentially be a support level. So that's second support at 4,600, first support at 4,800, accompanied by Fibonacci retracement at 61.8%. All right, okay. Now in terms of resistance, right, we can see US 500 pretty much stalling at this swing low here. This was a nice swing low that had taken place 11th of March, 1st of April. And then when breaking underneath it, this is likely to be the first resistance barrier. And then I see another nice overlap. Overlap level at 5,800. This is going to be the second resistance. Now we can see here, US 500 stalling at the first resistance. And we can also, I would also highlight this descending trend line, right? We can see US 500 has run into this descending trend line twice as resistance, first on 26th of March, then on 2nd of April. Now we can run the Fibonacci retracement as well, starting from the intraday all-time high, it's 19th of Feb, going down to the low on 7th of April. Looking at all the fibs, we can see that US 500, as it was rising strongly yesterday, it ran into resistance pretty much at the 50% retracement. 61% is here, 78.6% is also sort of in no man's land. We're just going to keep 50 and 60 once again. Right, so I would really like to see US 500 break through this descending trend line and also get above the 61.8% Fibonacci retracement. That would definitely bring a lot more buyers back into the market for equities, right? But for now, the trend is still to the downside, right? We see a series of lower highs, series of lower lows, right? We're really not out of this downtrend just yet. All right, okay. I think we've just got time for HK50, right, Lily? I'll just cover HK50, but before that, I'm going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the analysis with HK50, right? It's the Hong Kong index here. All right, I'll just keep the poll running for a little bit longer, and then we'll wrap things up by looking at the HK50. All right, okay. Now, looking at the HK50, we can see that I believe, let me just quickly look on the monthly. Right, okay, no, this is not the intraday all-time high. I was just trying to figure out if this level here at 24,000 was the intraday all-time high. But it seems like the all-time high for this index was formed in January 2018. And actually, you can see there's a much larger, or there's a very significant descending trend line, right? There's a very significant descending trend line. Then we can identify on the monthly time frame, right? This is something just to take note of on the monthly time frame, right? You can see, although it has rallied very strongly since March of this year, right? HK50 still remains in a very extended downtrend as seen in the monthly chart. All right, now coming back to daily. Okay, let's just adjust this a little bit. So maybe let's adjust it on the weekly first. So since this high of 2025, right? This is the 2025 high, hitting about 24,900. We can see that it has dropped more than 23% as well. And it looks to have stabilized at this multi-swing low here. You can see that nice double bottom being formed at around 19,000. First support took place on November of 24 and then January this year, right? So you can see here very strong support level, which is where HK50 has stabilized once again. This week, and that support level is yeah, about here. So first support for HK50 sits at 18,960. Second support, I think, might be this pullback level here. There's a nice pullback level here taking place at 17,874. And okay, now in terms of resistance, right? Oh, okay, it's just spotted a very nice resistance at 21,030. There's a huge gap here that has taken place between 3rd and 7th, 3rd of April and 7th. Remember, 6th April, oh sorry, 4th of April, last Friday, Chinese and Hong Kong markets were closed, right? So hence there's no candle for the 4th of April. And markets resumed trading on Monday, 7th of April this week. So, but before that, right, you can see this was a multi-swing high resistance of November 2024, resistance on December 2024, and when price breaks under this, and then it became a support level, resistance here became support, but once price broke under, it's going to function as resistance once more. And this is where HK 500 has stalled earlier today, right? So very clearly first resistance is at around 21,200. Second resistance looks to be at this little at this support here. We can see HK50 bouncing off 22,700 on 25th of Feb. Then again on 4th of March, right? Somewhere this looks to be like another pretty decent resistance barrier here. Or what previous support area going to be resistance now. Okay, we can run the Fibonacci retracement from this high, 19th of March, going down to the low on the 9th of April. Look at all the fibs. We can see 38%, the 38 and 61.8 retracements aligning very well with the first and second resistances respectively. So you can see here, these are indeed strong resistance barriers that are also accompanied by Fibonacci retracements. Right, so similarly, for this index, right, I would like to see it break out of break above this descending trend line, and also of course at the same time break above the first resistance at 21,200, and which this 38.2%. We do see a clean break here, right? I think then we're likely to see equity market sort of stabilize perhaps and maybe continue to climb a little bit higher. But for now, the trend is to the downside. This still remains under strong overhead pressures. All right, okay, so that brings us to the end of today's webinar. Right, thanks everyone for tuning in to today's session brought to you by IronFX. Right, and to remember, we've got US CPI coming up today at 12:30 p.m. GMT time. Softer inflation data is going to cause the dollar to come under pressure once more. So that would mean dollar index falling, dollar yen falling, and currency pairs like the euro, cable, Aussie, and Kiwi likely to rise. And we also have GDP data tomorrow for the UK. Despite the monthly GDP output being somewhat weak over the last couple of months, I think that should not prevent the pound from climbing higher, as we've seen demand for the US dollar really falter, and that has caused cable, the British pound, to remain elevated. And then we've got PPI data for the US out at 12:30 p.m. GMT on Friday, 11th of April. All right, that brings us to the end of today's webinar. Once again, thanks for tuning in, and I look forward to catching all of you at the next session. All right, take care, have a great trading week, and see you all soon.